Good morning, everybody. This is Live Trading Talk with Patrick MontesDeOca for December 20th, 2021. Omicron is putting fears in the market once again, making the markets very nervous, and we have a lot of liquidation going on in the equity markets pretty much across the board. Let's just watch the market here and see what kind of opportunities here this volatility creates for us here for day trading, specifically for day trading. The gold market is coming into a buy one level of 1792 when we recommended this morning to cover shorts at 1792 in gold. The low is 92. And it's reversing to the upside. So on the close here of this bar, you actually want to go long on the gold market. You want to buy gold at the market. Buy the gold at the market. Traders in my room, buy the gold at the market. Use a max dollar stop. And your target is 1804. Hold on to the silver. Trade from the long side. Trade from the long side. Use maximum dollar stop, and your target is 1804 for the day. Depending upon your profile, use the stop accordingly, whether you want to use a conservative stop, catastrophe stop, or a closing at the end of the day, depending on how you want to manage your risk. We're getting buyers here in the gold market, activating a reversion from the buy one level here, using the pivot point of 1792. The silver is reverting, so hold on to the gold and silver. Long. And look to add on the silver at 22.13 to 22.15. More buying coming into silver here from the buy one level of 22.25. When we get this price here, for those that are joining us here, once again, we're looking at the extreme below the mean of 22.25, which has a mathematical probability of 90% that if the signal is activated, it would revert back to the mean. And the mean is 22.47. $17.92 in the gold market is the daily buy one level. If you can see here on the left of the chart, 17.92 is the buy one level here, and this is the mathematical probability that we talk about beginning to unfold here as the market reverting from the buy one level as expected. This is called mean reversion trading. And pretty much it gives us a very clear structure as we come in for today, where we can see the extreme of that speculation that occurs during day trading, or even for swing or position trading. Silver is turning to the plus, and we have gold here. Looks like it's going to give us a nice day trade. Now, mind you, I'm focusing primarily on day trading, the VCPMI. And I'm showing you pretty much how I'm using this as a GPS for my trading here. And you can also use this incredible tool to add to your arsenal of tools that you use. This is not the Holy Grail, but it gives you probabilities. It's a probability model that identifies for you the extreme levels of speculation. And as we can see here, coming down to 1792 was the first daily level expected to see support come into the market. What we want to see is a follow through until the target is completed, which is 1814. If there are enough strong buyers that would take the supply that's being offered on the way down here. The Omicron has a psychological effect in the marketplace that is creating a lot of uncertainty, and people are basically very, very nervous about going back and integrating again into society here. The working conditions seem to be very, very precarious. Infections are at record levels. So it remains to be seen, basically, how this impacts the economy here over the next few weeks, potentially into the first quarter of this year, as the feds decide that they are going to reduce the tapering to $30 billion a month. At the same time that basically we have negative interest rates, which is kind of an unusual situation that we're dealing with right now, with the 10-year note roughly trading at about 149, 150. And we have the CPI at 6.8%. You don't have to be a math genius to take a look at that. We're running real nominal interest rates negative 4 or 5%. And obviously, if inflation continues to run without the idea that it's temporary, that spread is going to get pretty wide. And so we see a lot of nervousness in the market, obviously looking for alternative investments, as we see a tremendous amount of money that's been printed since the pandemic. We're looking at a 30-40% in terms of stimulus, and obviously it's jeopardizing the strength of the U.S. dollar as the world's reserve currency, when the U.S. is probably the biggest debtor in the world. The only thing that I believe is the key to the U.S. maintaining this bubble is the fact that the Treasury can print. They have a money printing machine that is unlimited, as opposed to the rest of the world. And so the question is, obviously, how much money they're going to print. And as they continue to print, how much they are going to depreciate the currency, the US dollar. It reduces its purchasing power. It's the silent killer to your savings, to the economy. But they don't tell you that in terms of we want more stimulus. And on one side, on one hand, they are saying, oh, but you're not going to pay for it. The public is not going to pay for it. Well, I happen to think that's a real bad misrepresentation, because the bottom line is that there is no other way that I believe the Treasury has, or the Feds, to pay for this debt, but simply by devaluing the currency, by devaluing the US dollar, and pay the debt with cheap, undervalued dollars. Very much, again, like Mexico did back in 1981. When they nationalized the banks, they closed the banks, and 2 weeks later, the peso went from 16 to 46, and then to hyperinflation. So that debt, if it was paid with very cheap dollars, devalued dollars. It devalues the debt that the debt or the currency is carrying that debt. So we have several areas that I believe are creating potentially what I believe is going to be an explosive move in precious metals here once we take out the speculation of digital assets and we come back here to reality, which is that gold and silver have for thousands of years been traditionally currency, money. And it's, being compared with Bitcoin, being compared with digital currencies, which are a completely new dimension. You can't compare apples and oranges. So it's a tremendous metamorphosis that is occurring in the financial markets here with the adaptation of these risk assets here that are closely being related to the U.S. dollar potential decline. If they continue to print here, it's inevitable that we're going to have the hard assets like real estate, obviously, to go up 30%, 20% like it is. But that's not building real wealth. It's simply adjusting for the inflation of the currency underneath, once again, very much like Venezuela. You look at the stock market in Venezuela, it's at record levels, record highs. And the reason for it is because the Bolivar is collapsing daily. So the rich will get richer even during inflation, while the middle class to the poor people will suffer and will wind up paying this incredible bill through inflation. They will transfer the risk to the public, to us, to taxpayers, by devaluing the currency. In essence, we wind up paying for this debt, as always. The Biden plan was rejected by Minson this morning. And so there is some resistance in terms of the amount of stimulus that essentially could put the economic long-term foundation of this country in jeopardy. So the question is whether this inflation is rampant or is going to be rampant or long-lasting. As we move into another possibility, obviously, that this Omicron could slow down the world economy once again. And, and then the question is, how much? We seem to have found good support here for gold and silver. And Bitcoin is pretty stable. It's unchanged, and it has activated a buy trigger here from the daily buy one level. At 45,768. For those that are trading or want to trade in Bitcoin and want to learn how, I would suggest to look at the micro contracts, which are MBT. The symbol is MBT, Mary, Boy, Tom. And use these contracts at least to understand the dynamics of trading in the futures contract here, because the full-size Bitcoin contract is probably one of the biggest contracts that we have on the board, if not the biggest. So use risk prudently, but they do offer tremendous volatility that is a trader's dream come true. If you have a profit built in to any of this position sufficient enough, trail it with a stop until the target is completed. As the market goes up, at least you can trail the position with a stop, and you can maximize it if you want to. But the minute that the position enters green, or it starts to move in your direction, the first thing you want to do is protect your entry point. The market is consolidating here at these levels with a bullish signal activated from gold and silver. With specific targets and the choice for you to manage the risk of this position according to your profile. The first stop would be a conservative stop, a close below. The second one would be a catastrophe stop. And then the third would be a close below B2 level if you enter from the buy one level. Use this area here all the way down to 22.15 if the market comes down to add to your positions. The AI tells you when the price comes down into the blue level here, you're looking at a 90-95% probability that the market is going to revert. As you can see here, the validation is here. It confirms that, and automatically the target becomes the level above. And in this case, the mean average of 22.47. So it's a very clearly defined pattern, and we don't, have to guess. We just follow the methodology that we teach in our trading room. And we apply it we trade live gold, silver, and Bitcoin here, but you can customize this for any market that you trade. If you're interested in joining us on a trial basis on Discord, give us a notice, give us a call, give us an email. Let us know. We are offering a 2-week trial. What we want to continue is to hold on to our positions long on silver, gold, and pretty much trade from the long side for digital assets as well. Bitcoin is long. The target is 46,787, which is the average daily price. And it has activated a buy trigger from the buy one level. As we keep saying here, that when the price comes down into these levels, this is what you're going to see. A reversion unfolding. But the market will confirm that. These are probabilities, these are mathematical probabilities that identify the extreme levels of speculation below the average price or above the average price. The market will be the only one that confirms it. Thank you again for the opportunity, my friends, to share this information with you. I'll see you next time. Have a great trading week and be careful out there. We'll talk to you soon.